Welcome back to Bunnex Investment Group. Today I'm going to walk you through a high probability entry strategy which I classify under sniper entry techniques and is commonly known as the ID50 entry strategy. A powerful setup that a lot of traders think they know but they do not understand it. Most traders get caught in the noise, chasing turns, reacting emotionally and making impulsive entries. But the result is always inconsistency, frustration, and blown accounts. But this video is going to delve right into the real ID50 trading, a clean structured entry system based on market geometry and real market maker timing. It's perfect for H1 executions as well as H4 executions. From my backtesting and real market application, this strategy gives you high accuracy when you are trading off the first pullback, which I'll show you on the charts. It will definitely give you a ride of the wave, not actually fighting. So like what I always say, all the strategies that I teach works, but the real question is, can you execute it with discipline? Can you wait for 2 to 3 days without an entry? Because that is where the ID50 logic lies. If you are ready to trade like a pro and leave randomness behind, then this video is going to be good for you. Without further ado, let's jump right in. Alright, so basically we are talking about the intraday 50 entry. And that entry, as I've said in the intro, that I classify it under sniper entry techniques. Alright, so by being under sniper entry techniques, it means that you are going to be someone who is very particular to data, and you are also going to be very particular to whatever that the market gives you. I've said a lot of traders think they know this particular trading style or trading strategy, but a lot fails when they are trading it. So how does that happen? Or what happens when we are trading the ID50? So the first and foremost, when we are trading the ID50, we need to locate a peak formation. It might be a peak formation high or peak formation low, or basically a peak reset. After location of those particular points, the next thing is to understand where the market is moving next. And then after looking for that particular bias, we can trade off the pullbacks. So this is the basic chart setup for an ID50, where we have the 200, 50, and then the 13 EMA for our entry confirmation points. So the first thing, as I've said, it is to find the peak formation. So to simplify peak formation location, all that I'm going to do for you, we are going to be trading from what we call a peak reset, right? A peak reset is basically a point which comes after a point of 50, the one in blue, and 200, the one in white, have crossed. So in some cases, peak resets comes as points that are not after completed cycles. So whenever we see 50 crossing 200, we expect to see the market to pull back to the 200 EMA. So when the market comes to the region of the 200 EMA, we expect that region to hold as a peak reset. And then our entry or our point of entry will actually come at the first touch of the 50 EMA, basically like at this particular point. So it's 50, 200 crossover, and then a move back to the 200 EMA, and then 1350 cross after that particular region, and then we enter right at the first pullback to the 50 EMA. So to simplify or to highlight all the steps that we are going to follow in the next example, we are saying you need to see 50-200 EMA cross, and then after 50-200 EMA cross, you need to see a peak reset at the 200 EMA. Then after that peak reset at the 200 EMA, look for a 1350 EMA cross, and then after that 1350, we need to see a pullback to the 50 EMA and get probably a candlestick reversal pattern like what I've shown. Alright, so we now need to have more examples so that we fully understand. We can see that we had a 1350 here. After that 1350, we can see the market came to the 200 EMA basically at this particular point. This holds as a peak reset. We can even see 3 levels, 1, 2, and 3 to the upside, peak formation high, and then a reset. After that reset, can we clearly see a beautiful ID50 being issued? Yes. Then we can see again the market issuing another 200 EMA retest. But it's unfortunate that this is not from a recent crossover of the 50-200. We want recent crossovers of the 50-200 EMA. So for us to validate the points, right? There was consolidation, and then after consolidation, what do we see? We can see that there was a beautiful peak reset pattern. But unfortunately, it's not always the case that we are going to get a beautiful retest. You can see that the market was shy of the 50 EMA, and this could have been a missed opportunity as the market kept on going to the downside. Here we can see a beautiful retest of the market to the 200, which is actually a peak reset, and that peak reset structure actually started from this particular point, created here, and then you can see a beautiful touch of the 50 as an ID50 to go to the upside. So if we keep on looking for these particular patterns, you'd see that it occurs most of the times. And when it occurs most of the times, it means for us to actually make money out of it, we need to repeat it over a long period of time or do it over a series of trades.